Hi everyone, welcome back to the Accounting and Tax Helpdesk. My name is Haas, one of the partner at the firm. This episode, I'm talking about the how to grow without going broke. Growth, which is very positive thing, can actually hurt you because growth brings complexity. It means more sales, more expenses, more people, more complex systems. So if your cash or system and leadership are not be able to support those complexity, it's gonna hurt you. If you try to scale a business too quickly, you might see some operational issues. You might miss payroll. Probably have a delay on your delivery. Your customer service is gonna not performing. If you see these operational issues, the growth is putting pressure on your system, so you need to adjust. For example, there was this restaurant owners. There were two guys. They opened three restaurants within 12 months. They didn't understand the costs of the operation in the restaurant, staffing, how the inventory for restaurant works. So within a very short period, they had to close two locations. They called us, then we signed them up as a client. We reviewed their financial. We gave them advice, and within 18 months, they actually opened a five location. But we just needed to basically help them to set up the solid foundation and processes. And they were good listeners, so now they're up and running and they're successful. Remember, healthy scaling is backed by numbers. If you analyze your number and make a decision based on a number, which is they have no emotions, you're gonna have a healthy scaling. A bad scaling is basically you rely on your emotions, you rely on the fake numbers, and more importantly, or worst of all, you rely on your ego. That's gonna hurt you very badly. Business owner, they only look at the top line revenue without understanding the cost of growth. The cost of growth needs means new hires, new system, new technology, new working capital. So if you only look at your uh, top line revenue, historical top line revenue, by default you underestimate the other costs that's gonna come with the growth. Uh, so it's gonna give you the headache down the road. You need to make sure understand the cost of growth correctly, which is going to be a future cost, not the historical cost. You need to understand if you need to buy new software, or if you need to hire the expert, or if you need to change your location. So that's going to affect on your rent. So these costs are very important, and you cannot underestimate them. The main important thing you need to do before scaling is you need to forecast. You need to forecast for at least 12 months, and then make the decision based on that. When you do the forecasting, you're gonna create a cash flow model, and in cash flow model, you're gonna have a different scenario: worst case scenario, best case scenario, and something in the middle. Uh, you're gonna forecast all the expenses, all the opportunity costs. So with that, you're gonna understand how long it takes for a sales convert to the cash. So the bottom line is you are not flying blind when you have the detailed forecasting. So if you forecasting for 12 months, you have to do, if you are in one location, it's simple, you do the forecast on one location. But if you are in different location, you need to do the forecast for each location, and also you need to consolidate all the forecasts. If you do that, you understand, okay, this location is actually hurt me. Maybe I need to funnel some money from the other location to this location until it's profitable. But if you don't consolidate them, you don't understand it. So the main goal for you is to forecast in detail, lay out the plan for all the location, and consolidate all of them. So if you want to scale, you need to have a good CFO by your side. Basically, the good CFO gonna sit with you, understand your vision, and put your vision into numbers, and then present that to you with the cash model. Then identify all the risk, build up the different scenario for you, then you can make a decision and move toward your goal vision. Uh, so if you don't have a good CFO or solid CFO by your side, and you just have a vision and you work on it, it's gonna be a very painful lesson because if you have a vision, you have an ego, and ego gonna hurt you, obviously. But talk to your CFO, uh, make the plan, have your CFO convert all the vision to your numbers. And we've done that before. We've done that with multiple businesses. We turn around the businesses that they were suffering on cash into the profitable businesses. So if you have any issue finding a good CFO, reach out to us. We're happy to help. Send us an email at helpdesk@alamircps.com. Our team gonna reach out to you and we make a plan. If you are rapidly growing, you need to have one eye on your cash collection. Uh, you need to be on top of it. If the customer is not paying on time, call them up or have a plan to collect their cash as fast as possible. The other thing is you need to negotiate with your vendors to get a better term, uh, and basically avoid overstaffing. Overstaffing comes with a fixed fee of payroll and all the payroll taxes that comes with it. And the other thing is you need to delay all your fixed costs. So if you want to open a new office, understand the rents that gonna affect on that. All the things I've just spoke of, they are tied to the cash. So we need to manage your cash more effectively. There are industries that are having the difficult time of scaling, or it's harder to scale. Constructions, restaurants, e-commerce. These industries, they have the high upfront costs and thin margins. So it's gonna take longer for them to get their return of their investment, and it's hard for them to grow. So scaling too fast for these industries is riskier. If you need the refinancing, we spoke of this in detail in the previous episodes. Go back and listen it. We break it down everything what you need to do on financing. But just to summarize, you need to have a mix of the reinvestment from reinvested profits from your current business. If you need the finance, then the best thing is to get a line of credit or any government assistance like a SBA loan or IDA loan. Then you can get the other long-term loans. But the one thing you should not do is plan for a long-term growth with the short-term loan and the Sharky financing. That's gonna hurt you big time. If you have a long-term, if you need have a long-term plan, make sure to get the long-term investments, not the short-term. The other piece of advice I give my clients is test your scaling first before going full on. Have a pilot program, test in one location, test the new hires, try to limit your product line, validate the demand, then understand the margin, then launch it. Like it's very important to test the concept first before growing. If you want to scale and you don't know if your team is ready to scale, you just need to have a ask a series of questions. Basically, you need to sit with your team and ask them if we increase the work volume, what's gonna be effect on them? Is the system breaking? Basically, you need to pressure test the system, then plan for growth. If your system already cracked, basically the growing magnify the crack and gonna have an explosion. Pressure test the system, then if you need to adjust the system or hire someone, then hire and adjust the system, or have the to renew your processes, then grow. One of the bad advice I hear all the time is just hire more and figure out later. It never work out. Or the other thing is build it and they come to you. That never work out. These advice are, to me, I just shrunk and I said like that's never gonna happen. Growth doesn't fix a bad system. Fix the system, then grow. If you grow faster than your system can handle, you need to pause the growth, pressure test the system again, pause hiring, cut all necessary expenses. Basically, you need to go back to the basics, then plan and fix the system, slowly regain the control. Don't think if you keep running on a broken leg, the leg's gonna fix itself. You just need to back to the basic, go to the rehab, fix it, and then start running again. The biggest advice I give to everyone is slow down the speed up. Growth is only good if it's sustainable. So as I mentioned before, get the clear understanding of the vision, convert the vision to number, and fix the process based on that vision. Then you can grow faster and more scalable. With that, my name is Haas again. Thanks for tuning in this week. If you like this episode, please give us a 5-star review on the Spotify, Apple Podcasts, YouTube. And if you have any question, reach out to us at helpdesk@alamircps.com. We are here to help. Catch you next week.